Ladies and gentlemen, this is Benedict here from Jagging and Company Associates, and today we are doing a detailed income statement, as we had mentioned earlier in my last video. So if you check my screen, I have actual income statement, I have budget income statement, and I also have comparison between the two. So before that, let me just take you to my data set so that we can have a understanding on what we are supposed to do before we model income statement using a table constructor. So if you check here, I have my table here. My table is named income layout. So this is the detailed income statement layout that I had mentioned earlier. And then you can see we have two columns of category sort, which is just the indexing of the category. And within the category column, you have gross revenue down up to earnings after tax. So normally when we generate an income statement, you always have various layout, but the layout should be detailed such that when you see your income statement, you can also see, or rather you should be in a position to see the details of your income statement. For example, now we have gross revenue, but when we come up with an income statement, we also should see the categories of gross revenue, such that when we add the categories, we get the total revenue, or when we net off the sales return and discounts from our gross revenue, should be having our net sales. The same applies to cost of sales, of which we'll have various categories of cost of sales. Then when we add the categories, we get the total cost of sales. So this goes down until we get our earnings after tax. So when you check, I have a table here. It's a model or a sample of what we need to use, or how we need to construct our income statement within our table constructor. So within that table constructor, we'll be having various columns for index, category, ledger, month name, quarter, year, branch, and values. So let's assume maybe you are having a company with different branches, maybe 4 branches. And let's assume that the branches are having, or the branches have been named company A, B, C, D up to D. So when you model your income statement, you will consider all those factors that company A, when you want to analyze in terms of branches, you're in a position to see the layout that I'm showing here in terms of branches from category column. Then it will also give you the details of the category, and the details of the category are just the ledger column that we're seeing here. So again, when you come up with an income statement, it is being done from January to December for a particular year, and then you can also have quarters 1 to 4, and the years also can run from, maybe, for example, here you have 2017, it would go maybe to 2019, 2020, or 2021. So when you are constructing your table, you have to consider all those factors. And then again, with this my sample table here, we have index column, we have category column, ledger, month name, quarter, year, branch, and values. So when we model our income statement using a table constructor, each line item of the ledger, when you check on my ledger column, each line item will be considered as a variable, because we use variables when we are modeling our income statement. So when each line item is considered as a variable, it then means that when we have different companies, each line item of sale for each company will be having a different variables respective of the others. so that when you have right sales in company A, the same variable cannot, or rather we cannot have the same variable in company B or company C or company D. And then of course we'll be having different months, different quarters, and then different years. So all these factors have to be considered when we are modeling our income statement. And then now we have our gross revenue. We have quite a number of categories, and then we have cost of sales. We have quite categories of cost of sales. We have operating expenses. We also have quite categories of operating expenses. So all these will be different variables, and they will also differ from company to company and from year to year. So supposing you are to model an income statement for maybe 4 years, it means that each variable item within your model of income statement has to be different from year to year. So when you understand that basic concept and that principle, it will be very easy to model an income statement with this detailed layout in a table construct. So down here I have quite a number of different tables. Sorry. I have the actuals. Okay, this comes from my previous data, so there's no change. It runs from 2017 to 2019. Then it has a column A, B, C up to H, of which are date, category, index, ledger, sub-ledger, branch name, and value. I also have date table, which runs from 2017 to 2019. I also have a detailed income statement layout. So this is the layout we are talking about. And then I also have already an unpivoted budget, and the original budget was this one. Normally when you come up with a budget, it always run maybe from month to month, then from year to year, but this one runs from January to December 2017. So our budget was just done for 2017 alone. And then you also have a ledger bridge. So the ledger bridge here is just a common table for the line items of the ledgers between the budget and the income, or rather the budget and the actual. So let me just take you to Power BI desktop so that we can see what next. So when you check here, you see I have a detailed income statement layout running from gross revenue to earning after tax. And then you can see also my budget is also running from gross revenue to earning after tax, and the same applies. The same applies to the comparison. I'm sorry for my voice. So let's assume maybe you've loaded, or rather now we've loaded our data into our Power BI desktop, of which we have the actuals, we have the bridge, we have the budget, we have the date, we have the income layout. So we have those tables 1, 2, 3, 4, 5. Rather 1, 2, 3, 4, 5. 5 tables is. Then now we need to create a relationship between our fact tables and data dimension tables, of which our fact tables we have the actual and the budget, and the others are the data dimension tables. So when I come here to when I click here on this button for model, you can see I have my data dimension tables up here, which is income layout, date, and bridge. And when I come down here, I have actuals and budget, and the relationship you can see is one to many between the For example, here from the income layout, the relationship is between one to many for the actual, and rather from the income layout and the actuals. And it's within the category column. When you go to date, it's the same, and the column is date. When you go to budget and income layout, it's the same principle. Cardinality is one to many, and the relationship column is its category. And then when we go to date table and budget table, the relationship column is the date column. And then now when you move to our income layout and bridge, we've also created a relationship between one to many, of which the cross filtering is coming from income layout going to a bridge. And this relationship has just been created so that we can have the order of income layout from gross revenue to earning after tax. Let me just take you back to the order of our income statement layout. It is from gross revenue to earning after tax, and then it's been indexed from 1 to 15. So the relationship has been created between income layout and the bridge so that we can have that order of indexing, or that order of the layout. Then now we have our actual income statement and the budget statement. So these two statements are what we are supposed to model in our using our table constructor. So let me just take you to where we need to build our visuals, so we can move from there. So from here, let me just come up with a blank page. So when we want to model our table constructor, having understood what I was trying to explain back in our this is our model, this one for with the 8 columns. Having understood the principle that we have to consider that, or rather we have to consider all the factors here, that we have index, we have category, we have ledger, month name, quarter, year, branch, and values. So we need to model our income statement in such a way that one variable should be different from the next variable. So let me just give you an example of what I did before we try to model practically model our income statement. So let me click here on actual income statement. So when you check from row 1, row 1 I have actual income statement, which is an equal, or rather actual income statement is equal to all these variables. Then we come down here, we have another variable for income statement items, of which here is where we come with our income statement table model. Then down here we'll filter out our income statement, of which we'll filter all the items within that table that we've modeled. So here you can have right sales, then the expression, rather the formula that I've used to calculate the right sales, just calculate sum x, and then of course we have our table, which is the actual, and then the expression is the actuals. The expressions is within the column of the value within the actual table. So again, we need to sort out the category, or rather we need to filter out the revenue column for right sales. So here I have quite a number of filters. I've filtered category to be gross revenue, because if we don't filter gross revenue, that means that all the category, including cost of sales, operating expenses, will be added into our freight sales. So we need to filter the category where we need to get our freight sales. So here we have gross revenue. Then from here again we have another filter, freight sales, because we have quite a number of categories within revenue. But here we only want freight sales. So I've also filtered freight sales. And then we are doing the month for January. So I must also filter the month. And then we are only doing the company F. So I must also filter the company. Then here, of course, it's 2017. In this example, I only did for company and I only did for January 2017. So when you check here, you can see the first quarter was never considered because we are only doing January. So the same principle that we've applied in our first variable here will be applied for all the variables for gross revenue, or rather all the categories of the gross revenue. Then again, when we come down now, we need to have our total sales, or rather net sales for that matter, if you are having maybe return outwards and discounts. Not return outwards, but return inwards and discounts. So our total sales we'll reference our variables here, which is freight sales plus sales plus other revenue plus forex sales, room service sales plus recharge sales. Then from there again, now this one we need to also, rather from there we need to get our freight, or rather cost of sales. And then cost of sales, we have quite a number of categories, of which we have freight cost, express cost, forex cost, room service cost, and phone recharge cost. So the same principles that we have applied in getting our total sales, or rather total revenue, is the same principle that we apply in getting our total cost of sales, of which we'll do the variables for we'll do all the variables for cost of sales, and then we'll get the total cost of sale by adding all the variables. Then of course our gross margin will come to total sales plus total cost of sales. But normally it is always total sales, or rather net sales minus cost of sales. But since our values in our table, or rather the costs, the value of the cost in our tables are negative, so here we need to add total sales plus total cost of sales to get the gross margin. Then again, the same principle that we applied in cost of sales and gross revenue, the same principle will apply in operating expenses, such that we'll do the variables for administration, marketing, other expenses, transport and travel as the category of operating expenses. Then down here we'll get our total operating expenses by adding the variables for administration, marketing, other expenses, transport and travel. Then after that, now we can get our earnings before depreciation, interest and tax, of which will add our gross margin plus total operating expenses. We are adding total operating expenses because of the values of our total operating expenses is negative. So when we add, we get our earnings before depreciation, interest and tax. And then now we do the variable for depreciation, and then we also do the variable for amortization. Then we'll get our total depreciation and amortization, of which we'll add the variables for depreciation and amortization. Then again we'll do our variable for earnings before interest and tax, of which is just an addition of earnings before depreciation, interest and tax plus total depreciation and amortization. But again, here we are adding because the values for our depreciation and amortization are negative. So again, we use the same principle and do the variable for interest. Then when we subtract from our EBIT, we should be getting our earnings before tax. Then the same applies to our installment tax or tax. So we'll do the variables for various tax items. Then we'll get our total tax as a variable. Then we'll be getting our earnings after tax. Then now if you check the variable here for the income items, so this is where we come up with the table such that when we have January, we have we have a category column where we have the figures 1, 2, 3 up to 15. This is the index column for the category. The index column for the category is where we have values 1 up to 16. And then of course we have January, and then we have our year here 2017, and then we have company A. We have our company A is just our branch. We have here, then we have our category, of which we have gross revenue down up to earning after tax. Then we have our ledger items here, which are just the line items of our category column. So for gross revenue, you have right sales, express sales, other revenue, forex sales, room service sales, phone recharge sales, and then we have a total revenue. So on the values column here, this will now reference our variables that we did the calculation here. So for the values here, we'll just reference our variables up here. So this happens until we go down up to earnings after tax, and then now the return here will filter the income item. So we'll filter the whole table, and then when you check my income items, you can see each and every row have the same number of columns. Like now if you check 47, we have your index column, we have the month column, we have the year column, and then we have branch column, we have category column, we have the ledger column, and then we have the values. So the same principle has to be applied in all the rows running down up to until we get our earnings after tax. Each and every row must have equal rows with each and every row must have equal columns with others. Is when the table can be constructed. So this is what I did, but I only did for January and I only did for company. If we check here on my variable income items, so this was supposed to be a scalar value, not a string. So this was just an oversight. So 2017 should just be a value, not a string. Should be a scalar value, not a string. So let me try to change this. It will take quite time because we have 16 rows. quite a lengthy exercise, but we'll just do it to avoid any confusion. Between strings and numbers. Okay, so we managed changing all of them. So this is how it's supposed to be. We have index column, month column, year column, branch column, category column, ledger column, and of course the values. I did not have the quarter column because I was only doing for January 2017. So having a quarter column was unnecessary. And then I was only doing for company. Then now if you check down here, this is my table. You can see I have index, month, year, branch, category, ledger, and values. So it goes down up until I get my earnings after tax. So let's assume you want to model a table so that we see what happens next. So what I need to do when I want to model that income statement, I'll come here to modeling tab, then I'll click table. Then I want to name this one income statement. Income statement. Let me do income statement 2. So from here we need to model our income statement, but I'll be using variables. So first I'll start with freight sales. Is equal to calculate sum x actual and actual value. Then from here I need to filter out the category column, the ledger profit sales, the month, the year, and perhaps the quarter if I would do the quarter. So I'll start with the category. So I'll say actuals category is equal to gross revenue, and again actuals branch is equal to company A, then actuals here we did here, we have date here is equal to 2017, Then we also have date month. Date month name is equal to Jan. Then what else is my gross revenue? Then actuals ledger. Is equal to freight sales. Let me close the bracket. So let me try to run that, but this will not run because we have not concluded making, or rather finished making our code. So I'll go down here and then do var income items is equal to, so here we'll use the curly brackets. Then within the curly brackets, of course, I'll be using the parentheses. So here I have again, I'll have my index column, then I'll have also after index, let me have category column. Let me have category column. So here we have my gross revenue. First, let me have January, then month column. Also, let me have month column. Then I go to it. So here you will have Jan as the month column. Jan under the month column. Then I'll also have 2017 and the year column. Then now I want to have category. So it is gross revenue. Then from here I need also ledger, so this will be right sales. Right sales, what else should we have? Let me see, 1, 2, 3, 4, 5, 6. Then I have 1, 2, 3, 4, 5. It's supposed to be 7, so I need to have right sales. We have here gross revenue, have right sales. Of course, now I need to have branch names. So this is company A. Then now I'll be having my values. So my values are different. I will reference the freight sales. So here I will just write freight sales. Then again down here I need to filter out the income items. So I'll come here with the return. Filter. So I want to filter the income items. Then I need the values. So I'll have my values is in column 7 if I'm not wrong. 9 right values I have, it goes up to column 7. So this is what I need to filter. Then now I can run my code. So when we come here, let me just click to this income 2. You can see now I have value 1, value 2, up to value 7. So my value 1 here should be index. So I need to rename the column headers. So this is index, then value 2 should be month name. So let me just write month. Then our value 3 should be the year column. So this will be year. Then our value 4 should be category column. So this is category. Then this value 5 should be ledger column, and then this other one should be branch name. Branch name. The branch name, and our value 7 should be amount of value. So let me just give it as value. So already you can see we are modeling our income statement table that should go up to earning after tax. So let me go back to creating our code. So when you want to, rather, you can also format the code that we've just done so that it could be easier to read. The Marco Russo, rather the Marco Russo and Alberto Ferrari, when you don't use the DAX formatter, then they say this is not a code. But for me, I will not use the DAX formatter because I want quite a short short page. So when I use the DAX formatter, the code will be so long. So you can use the DAX formatter when you're doing, but for me today I will not use the DAX formatter. I just want to show the principle. So from here again, you can copy this one, the first code, and then so what I need to change here will be express sales. I'll do express sales now. So where there's express sales, where there's freight sales, I'll say express. And then we are still doing company, and the month is still January. So again, in my var income items, I'll copy this code. Then now here we'll change this one to freight sales, or rather express sales. Then here again, I'll now reference the express sales, not freight sales. So here is where we need a lot of keenness to have the correct values. Then now if I run my code, you can see the value of my express sale. Let me just do this one, create some keenness. I don't want the decimal places, so okay. So the same will go until we go to our, rather the same principle will be applying until we get our earnings after tax. So let me just do again. Let me do again the revenue. So this one will be the revenue. other revenue. So here we'll where this express sales, I'll be writing other revenue. So here we'll change to then down here also we'll copy this code and change express sales to other revenue. So this one into reference via the revenue. Then you can run the code. And then now you have to make sure that the spelling of your freight sales, express sales, and all this must tie with what you have in our actual tables. So this, when you have a mistake in your spellings, the values will not come out. So you must have the correct spelling as per the spellings in your fact tables. So again, when we check here under our gross revenue for company, let me just filter company A. We only have freight sales, express sales, and other revenue. So I want to make a shortcut. So instead of doing this other revenue like forex sales, room service sales, because I'm only doing company and company has got no category of the forex sales and room service sales, I will only do freight sales, express sales, and other revenue. So when I go back here now, instead of adding forex sales or room service sales, what I will do the variable for the total revenue. So yes, total revenue is equal to freight sales plus express sales plus the revenue. Then down here again we need to, I will copy that code, then apply the same principle down here, but now here we write total revenue. So this one is also total revenue. So this will also reference total revenue. And when we run this code, you can see we have our total revenue and 6306. So ladies and gentlemen, this was just trying to show you what you need to do to model an income statement. So you need to do all this until you reach your earning after tax. So I'll not continue with this. So at least you have the clear picture of what needs to happen when you want to model an income statement. So just show you what I had already modeled, which is the actual income statement layout. So the same procedure that I've been applying on this other the income statement too is the same procedure that I apply to model the income statement, that rather the table for the income statement. And you can see down here. So this is what I did. You can see I have here my gross revenue with the ledger items and total revenue. We also have cost of sales, the ledger items, and then of course total cost of sales. I also have my gross margin, and when you come here, see my gross margin is up here. Gross margin is total sales plus total cost of sales, because total cost of sales values are negative, so I must add. So it's the same principle that we apply when we are doing our income statement in Excel. is the same principle that we apply here when we are modeling our income statement using a table construct. So the same will apply until we reach the earnings after tax. So let me just show you the table here again. So you can see here the table here we have gross revenue, cost of sale, total cost of sale, gross margin, operating expenses, total operating expenses, earnings before depreciation, interest and tax, earnings before interest and tax, bank interest, earnings before tax and earnings after tax. Then when you check closely, we don't have depreciation because the depreciation in January was 0. So when the values are 0, they will not come here in there. They will not feature here in the table, but your code should have your code must have those values that we expect in an income statement, such that when you are to do for February 2017, and then there was depreciation. So when you do your code and run your code, the value for February 2017 will come out when it is there. So here it is not here because the value for depreciation in January was 0. So here I've shown you our modeled table. So after modeling a table, but before then, the same principle that we applied in modeling our actual income statement is the same principle that I applied in coming up with the budget also. So the budget also will use the same principle. So let me just expand for the budget. You can see now here, instead of having the actual, then I have now the budget. My table here is budget. Also the values column for the budget, and the filtering I'm using the columns for the budget. So it's the same principle that we apply in the budget, that we had applied in our actual income statement. So after modeling your income statement, you also need to create a relationship between your bridge, and your tables that you model using a table construct. So here you see I have a relationship of 1-to-1, and the cross filtering is bidirectional, such that the bridge, when you go to the bridge, you can filter the items in the budget statement and actual statement. And again, if you go to budget income statement table and the actual income statement table, they can fill the ledgers, they can fill the ledger items in the bridge. So again, my ledger bridge, or my bridge, has been linked, or rather a relationship has been created between the income statement layout and the bridge, such that when I create my income statement, I need the order of the income statement layout from gross revenue to earnings after tax. So my filtering will come from income statement layout to the bridge. So you can see I have a cardinality of 1 to many from the income statement layout to the bridge. So we have a full model here for our detailed income statement. So now we need to do our visuals. So when you come to our visualization pin, we have quite a number of visuals, but then we need to just have that format of income statement. So we'll start with this matrix. I'll click on matrix. Then within the matrix, now after clicking on the matrix, within my field, below my field button here, so I'll drag my category. I'll drag category and put under the rows. So remember, I created a relationship between the income layout and the bridge, and I needed the order of the category from gross revenue down up to tax, rather down up to earnings after tax. So I'll pick the category column within the income layout table and drop it under rows. Then again, now we need the ledger items to give us the detailed income statement. So I'll go to bridge and pick the ledger column and drop under rows. So when you check our matrix here, you can see the arrangement from gross revenue to earning after tax. Let me just expand so that you can see the details. I'm expanding on the category column. So you see on my matrix there on the category column, there's some items that I'm not expanding, like now total revenue. We don't need to expand. We don't need the details of the total revenue because we know the total revenue is just the summation of the revenue items. And then cost of sales, we also know this, the summation of, rather total cost of sales, we also know that it's a summation of the category of cost of sales. So you know we don't need to expand the total cost of sales. The same applies to total operating expenses, earnings before depreciation and interest and tax, earnings before interest, earnings before tax, and earnings after tax. Then now let's bring down the values, and because we are doing actual income statement first, so I'll go to the model that I made, the model for the actual income statement, then I'll drag the values. I need to click on the matrix first, then drag the values and put under the values. So here you can see I already have my income statement, but when you check down there under total, the total is totaling from gross revenue down up to tax. But since we modeled our income statement, we've done some calculation of rows, so it then means that if we use the total down here, it will be wrong to consider it maybe as a net income. So we need to hide the total here. We need to hide it to just have our net income as earning after tax, but not the total. So again, I want to do this in terms of yes, so I'll drag the year column and drop in the column row. So already we have our income statement, so we need to do some few cosmetic changes. So I'll click on this formatting button. I'll go to grid. I need to expand on the row padding, so I'll increase this one to 3. Then also I need to increase the indentation of the ledger items. So again, I'll go to row headers, then I'll increase the indentation of the step layout 24. Then the plus minus icons I will hide, so I'll put that off. But before then, let me just put it back. We don't need the details of earnings before depreciation, interest and tax, earnings before interest. We don't need the details for this because these are calculated columns, so you don't need the details for this as well. total cost of sales we don't need, gross margin we don't need details, total revenue also we don't need the details. So now we can hide our plus minus icons, and then we need the normal layout we always do in our Excel to appear here in our Power BI. So I will hide the subtotals of our category with the category row. So what I need to do here, I will go under subtotals, then I will hide this row subtotal. So when I hide the row subtotal, you can see gross revenue. Yeah, there's no value. Cost of sale, we don't have values, but the calculated columns, this one we have our values. So operating expenses we don't have, but total operating expenses we have. Again, we don't need the details for total operating expenses. So let me just do another change here. I'll go to row headers. Let me put on again the plus minus icon. So I don't need the details of this one for total operating expenses, then I'll put it off again. Then now let me do a title. So I'll go down and do a title. So here I'll put the title, and then I'll say this one is actual income statement. And then I'll line it at I want the font color to be white, and then the background color to be maybe that color. Let me change it on okay, it doesn't look good. So let me do this color, and then give it a center alignment. And then again you can also do a border here, and then you can do a radius of 18 px. Then you can also do a color of the same as the title header. Then now again you can go to, just click back, then I can go to values, background color I don't need, and see row headers, font color I want to be this color green, so I want them to be separate from the category items, or the details of the category. Then also go to values, then font color, no, not values, but let me see subtotal here, if I can change the values font color. Yes, so this is what we want. So here we model our detailed income statement, but let me just do a budget to make it more clear. So, but because our budget has more details, so I'll again click on this matrix. Then I'll bring our budget here now. So again, I'll go to our income layer, drag category, put under rows. Then I'll go to the budget ledger, then drag this one as well, drop under rows. Then I'll pick the values and return the amount with drag on values. Then again I'm doing in terms of year, so I'll drag the year column, put under columns. But we were doing a budget of, but or rather income statement has been done January 2017. So let me just go back to my income statement. I'll drag, instead of year, I will drag not branch but month. So here I will do away with the year, put the month here. Okay. So, but again, we don't need the details of the total operating expenses. We don't need the details of the calculated loss. So let me just go back again and yeah, I'll go to row headers and put the plus minus icons. So this one we don't need. We don't need this too. I don't need this as well. Bank interest paid, but you don't need details of gross revenue and total cost of sale, total revenue, so we don't need. Then earnings before tax and it. Okay, so now I can hide the plus minus icons. Yes. Forget about the misalignment of the revenue. So what I need to do, ledger, ledger flow. Actual budget. Okay, I need to get my, or rather when I click on my actual income statement, instead of picking the month for the actual income statement, I pick for the budget. So let me just pick the right figures from the right table. So I'll click, rather the right column from the right table. So I'll click again back on this. I'll go to actual, then I'll pick the month and drag here. So now you can see our alignment is correct. Then again, I'll go back to my formatting table, expand the window and row headers. Then I'll put this one on again, and the calculated columns, you don't need the details. So I'll hide the details. So now I can put the plus minus icons off. So now the same principle that I've applied on, or rather the formatting for this income statement, can copy and paint on my budget. But my budget also need to expand on now. I need to expand on the details of our category. So I'll go under row headers, then put this one on, then I will expand this one. Okay, we'll also expand on cost of sales. We'll expand on operating expenses, then amortization. Then again I will expand on bank interest. I will expand on tax. Okay. Then now I will just come down here and increase the row padding. So okay, let me just try to copy the formatting for this one, then paint on. Yes, so I think this is okay, but we were doing for January 2017. So I'll click again on this one, go to my field formatting button, then instead of here we'll drag, instead of the year column I will drag the month column. So I'll drag the month column here. So that is January 2017, but I need to hide the, it has gone back to where it came from. So let me again do the reformatting. I'll go to row headers, the plus minus on, then don't need the details of the calculated rows, so I will hide them. The calculated rows, we don't need the details, that's why I'm hiding the details. So what else? Now my plus minus icon I can put off. Then again I need to hide the total because it's not giving the correct figure as far as earning after interest and tax costs are, because it's adding up even the calculated one. It's adding up even the calculated rows. So what I need to do, I'll go to subtotal and then I'll hide the row subtotals. So now we have our detailed income statement layout, but again let me again do the title. So let me do the title and come here and do budget income statement. Okay, so here you can see we do have our budget income statement. Try to expand it a bit. Okay. From here again, now we can do the comparison. But before then, we need to have done some measures before we do the comparison of our actual income statement and the budget. So here I did some measures, and the measures we are doing for both the budget and the actual income statement should come from the modeled tables, not from our actual fact tables. They should come from our model tables. So when I click on this, my actual as a measure, click back on my actual as a measure, you can see I have calculate then sum x, then I'm picking it from the table is actual income statement, and the expression is coming from the column of the income statement values, actual income statement values. The same applies to our budget as a measure. It comes from the model budget table as a table, and then the expression has come from the column of the amount of the budget statement table. Cost of sales, you can see our cost of sales. Now I need the actual cost of sales, so I've picked again my calculation has been based on the income statement table that we had modeled. So my category column for the cost of sales is coming from the actual income statement table that we had modeled. So the same applies to operating expenses. The filtering also is coming from the same table, and the same applies to revenue. But revenue now the same applies to revenue, where we filter our gross revenue from the actual income statement and not from the actuals. Then the variance is just the difference between the actual budget, the actual minus the budget. So we pick our values of our actual minus the values of our cost of sales. So these are the measures I just did to do some other visuals. So here we can do the comparison on the measures that we have done. So again, I'll click on this matrix, then I'll again pick my category, then drop under rows. Then now the ledger items that I need to put in when I'm comparing the values, I need to pick them from bridge. So I'll pick the ledger items, then put here under the bridge. Then now I need to expand. Let me close this measure. I need to expand on the details of our category column, but the calculated rows we need to expand. And then again we need to hide the total down here because it's giving a misleading figure, because the summation of that total is including the calculated column, so we need to hide it. So what I need to do, but before I add it, let me just add the values. So I'll pick my values from the measures. Now the values are coming from the measures, not from the model table or the actual fact tables. So I'll pick my value actual here and put drop it under values. Again, I'll pick my budget here, drop under values. Then again, I'll pick the variance and drop under values. That now these are the details that we don't need. I will hide like total cost of sales. I'll hide the details of the calculated rows. So this I will hide. This one like this. So let me copy the formatting for this budget income statement and paint on the comparison. Okay. So we need to hide the row headers, rather the subtotal, so the row headers. So I'll hide that. Then I'll give it a title again. So I'll give it a title as actual versus budget. Okay. So ladies and gentlemen, this is how to come with the model income statement for the detailed layout. So from here you can see we have a detailed income statement that we always do in our Excel. So it's not quite easy to come up with an income statement, but you can always go around table constructor and do an income statement. And then again, what you have to be keen on is having the facts at your fingertips that the variables must be different from company to company. When you have different companies and when you have also different branches, they must be different from branch to branch, and then from year to year, then from quarter to quarter, because analysis of an income statement always come from it's always being done month-wise, quarterly, yearly, and then branch-wise. So when you're having different branches and we have the months running from January to December, again you also have your quarters from quarter 1 to quarter 4, and then of course the number of years, maybe from 2017 to 2019. So the variances and the coding is quite a lengthy one, but the variables must be different from month to month, year to year, branch to branch, and quarter to quarter. So the concept of calculating an income statement is very simple, but the coding is so lengthy. It's still a lot of patience and resilience. So here we come up with our income statement, the detailed one that I was talking about. Then from this one again, you also can do some other visuals, of which I did. So my visuals here are just coming from these measures for cost of sales, operating expenses, and revenue. So from here you can see our actual earnings after tax, of which we did a clustered chart, the clustered bar chart. But since we are only doing or rather generating an income statement for company A, we only have the earnings after tax for company A, which if you check down here, it is 25.5k rounded off to 26k. Again, when you go to revenue, our revenue here we did the waterfall chart. In the waterfall chart here we have freight sales, express sales, and other sales, and the total is coming to 96. When you check on my right, or rather my left hand side, we have our total revenue as 96k, and then we have express, freight, and other revenue as 44, 49, and 2k respectively. And then again we also do the actual cost of sales, and the same principles has been applied, so that when you check on my left hand side on my income statement table in the matrix, you can see the freight cost of sales is 21k, or rather 21.6. You can see ICE is 21.603k. No, 21,606,000, which is 21.6k on my visual here. And again, our express cost of sales is 18k. And you can see here from my matrix is 18,017,000. And then we also did operating expenses. And operating expenses is only for company A, because the income statement generated was only for company A. And the total cost operating expenses, you can see it is 30,950. In my visual here is 30.9k. So ladies and gentlemen, this is for today. We will see now we can come up with an income statement using a table constructor, and it is detailed the way we always do it in our Excel workbooks. And then you can also do visuals from the same. So if you've learned something, please share your comments. And again, I'm still asking you to subscribe so that we can learn financial reporting together, rather than the reporting of a corporate, the insights together. So subscribe to my channel so that we can move together. Again, in my next video, I'll be doing a balance sheet, and we will source it from trial balance. So our next video will be based on balance sheet sourced from trial balance. So ladies and gentlemen, this is enough for today. Let's meet soon. Let's meet in another video.